All right, I've been really bad about sending you some updates here lately, so let's get into it. Most important topic out there: what to expect the rest of 2023. I know this is on a lot of y'all's minds. I know people are frequently asking me, okay, where's the market headed? Where's interest rates going? Let's get into that. Interest rates are always on people's minds. It's really kind of what's influencing a lot of things right now. Interest rates have actually been on the uptick the past few weeks, a little bit different than what we were expecting, but the debt ceiling had a lot of effect on that. And at this point, I think that's gotten resolved, so it may have balanced things out a little bit, but they didn't drop back down or anything either, from what I understand. The interest rates are still fluctuating between 6 and 7%. We've kind of been in that arena since late summer last year. So we're coming up on just under right now. We're still just under a year that we've been in that 6 to 7% range. We did kind of get down in the upper fives, I think, for a short minute, maybe kind of. You've had some people who've had some buy downs and stuff that's got them there. So interest rates right now are in the 6 to 7% range. There is some belief that they will start going down as the year progresses. I have heard that we could get down as low as the fours by the end of the year, but uh, that's really just kind of dependent also very heavily on what happens. What happens with does will the Fed keep on raising the federal interest rates, or as there's some indication, are they going to put a halt to that for the moment? I don't know. I've heard some. We'll be kind of be looking for the middle of January to kind of see what happens going forward with that. But there's I've heard that they might raise them again another quarter point, which could in turn raise all the interest rates, or they could stop. In which case, that could immediately signal a reduction in interest rates. It would be whatever it is. I would expect gradual. I wouldn't expect us to go from 6% to 4%, in the course of a day. But weirder things have happened. The other thing I would do is I would temper your expectations on what's going to happen when you get the lower interest rates. Well, maybe. I mean, I don't know. It actually may be a good thing. It's the one of the big things with the interest rates right now is it's making it harder. It's making it more expensive to borrow money for buyers, which is really less of a problem than the fact that there's a ton of homeowners who aren't selling right now just because they're sitting on those 2 and 3% interest rates that they either bought on or refinanced at in the past 3 years during the pandemic low interest rate era that we were in. So interest rates going down now. If interest rates going down leads more sellers to sell, in which case that would actually probably leave home prices at the same point that they are, um, or it might even lower. But now if interest rates starts going down and it doesn't cause more homeowners to start selling, then it will lead to higher home prices because it will increase the amount of buyers that enter the market to start buying. So that's where interest rates. All right. So what should we expect for home prices? Well, I talked about that a little bit already, but I wanted to kind of jump into that a little bit deeper. We're always looking at a supply and demand when we're thinking about home prices, and whenever I'm talking, I'm usually talking in terms of the Kansas City area. So, but the home prices in general now, the national average actually home prices have ticked down just a little bit. I believe in Kansas City that's they've actually gone up a little bit. So Kansas City not following the trend of the national average, but and in general, my impression is that Kansas City is always going to be is a little bit different market than some of the other areas. I think we're going to keep on seeing an uptick on that. But supply and demand. Supply is low, partially because a lot of people who are homeowners aren't selling right now because they're sitting on the 2 to 3% interest rates we just talked about. So I don't want to rehash that whole conversation again. But kept supply low, and then we've got a lot of buyers out there still looking to buy even with the higher interest rates, and so we're dealing with a lot of multiple offers on homes above ask, waiving it, inspections and stuff like that. So this is home prices are still going high, and I would expect that to keep on going forward. Now, interestingly enough, I would think I believe if interest rates took a big drop, like if they dropped down to fives, low fives even, I honestly think that would actually balance out home prices because we some of those homeowners would be a little bit more open to selling at that point, which would increase the amount of homes for sale, which would actually I think would balance it out. Now it's all a little bit questionable because as the interest rates go down, the will also bring more buyers. So it just kind of depends on whether the amount of buyers that come would match the amount of homes that came. So it's a really kind of I would expect if interest rates go down, will either stay the same or home prices will keep going up. Or they could go up dramatically if still home sellers are like, well, low fives aren't even enough, and we need to get down to the fours or maybe even threes again. If they're waiting for the threes again, I wouldn't expect to see threes again anytime soon. Now, so right now though, home prices are in Kansas City are still slightly up versus last year, which was up versus the previous year, and so on for a little while. The I would expect that trend for right now for Kansas City to keep going up. Through the end of the year, I don't really see it. Might balance out sometime in the course of the year. I think if it starts bouncing out, it'll probably hit the fall when it starts bouncing out again. So I would target the fall for home prices. But right now they're going hot and heavy. And if you're looking to sell right now, is the best time to sell. So something to think. So just to kind of summarize, interest rates are high right now, and they're projected to go lower throughout the year. Home prices are high right now, and I think they're going to keep going up for a while. They may balance out towards the end of the year. I don't really expect a big drop anytime soon. So, if you're looking to buy a house, I still think today is the best time ever to buy a house because every day the prices are right now continually going up, and at best, I think they're just going to balance out. I don't think they're ever going to start a dip here in Kansas City anytime soon. So, if you're waiting for the prices to make a big drop before you get there, uh, you may be waiting a long time and timing the market just isn't what you should do. If you're looking to sell a house, your situation is kind of a case by case situation. You really kind of got to evaluate your own situation on that uh, based on needs and that sort of thing. I wouldn't always factor money into that, but it definitely has to come to play. I'm not gonna sit here and tell you that, if you're sitting on a 2.5% interest rate you know, that you definitely need to sell right now because if you don't have a big reason to, then holding your interest rate, makes sense to me too. So, but outside of that, uh, if you're looking to get top dollar for your house, you want to make a big move, now's a good time to do it. Let's talk. My name's Eric Best, eXp Realty. Also, my partner Brandon Plunkett. A lot of you are in communication with him, so you can talk to either one of us. Our information is down below email. If you can shoot me a message, shoot me an email, or you can call me at 501-712-6777. Thanks. Talk to you later.